entertainment. Stock of the day. Thought we're a bit light on in resource stocks on the call today, so I thought we'd have a look at Pilbara Minerals. Citi has upgraded Pilbara to a buy from neutral. The broker has tipped lithium prices will track sideways for the next 12 to 18 months. However, remains bullish on the long-term outlook. Target is $4.50 a share. Shares are up by over 4% right now. Rudi, sort of lithium stocks have come off the boil, haven't they, in the last couple of months, and where the lithium price is going. So do you agree with an upgrade to a buy here?
I don't think there are many segments on the share market that are as volatile as lithium.
Yep.
Maybe biotechs without revenue would come close. So a while ago I attended a conference, and there were a few fund managers who were in lithium stocks.
Yeah.
And I think the best advice they gave is to investors is, you know what, you just get in when they're down, you have a long-term view, and you take the volatility on the chin, basically.
Right.
Because, I mean, we see so much research, and in particular in the last 10 days or so, just about every analyst worth his salt has updated their thoughts on lithium.
Yeah.
And the general consensus seems to be that for the time being, the price is probably sideways at best.
Yep.
And there are downside scenarios.
As Citi was saying, they reckon.
I mean, they're not out of the consensus with the rest, but you will find very few analysts who take a medium to longer term view and will tell you that this sector is on the nose. Having said so, not all lithium stocks will be equal.
Yep.
And usually the consensus is that either Elkem, which is obviously going to merge with their US partner, or Pilbara Minerals are usually the quality ones in the sector.
Because they're producing now, aren't they? So
it's not only that they produce, but it's a combination of the costs, the type of product, and in Pilbara's case, the reason why people prefer Pilbara is they have more growth under their wings, basically. But that's on the assumption, of course, because we're quoting mining stocks here. Yep. That's on the assumption that all the plans, all the projects, everything, the financing and everything goes according to plan. But as things stand at this point in time, they have the most potential, which also means that even if Citi is correct and on balance, the price of lithium in China doesn't move over the next 18 months, they should still have growth because their volumes will increase. And that's what you often see with...
So they've had a bit of a pullback.
So this is, if you get on board, this would be the time to get on board. Well, it's not my type of investments. You probably have to look on the other side. But if you want to... Usually the great investors in commodities always tell you, you buy them when they're down, and you just sit down until the bounce comes. Because the way these stocks trade, the difference between going down and going up is absolutely massive. And before you know it, the share price can easily double or triple, given that they went down by 40-50% before that.
So, not for you because it doesn't fit your investment strategy, but if it does, this is the time to buy.
Given how the share price has gone, this would be a time to get on board.
Shaun?
Look, I agree with most of the points that Rudi just raised then. So
most
you don't need to be nice.
Look, we've written a couple of white papers on lithium. Every time the big banks come out and say there's an oversupply or prices are tracking sideways, we've just got data that suggests otherwise. Morgan Stanley came out and did it in 2017 when lithium was at 16,000 a tonne. That fell to 4,000 a tonne. Who was buying all the way down? Morgan Stanley through there. Doesn't make much sense. Then Goldman's came out and did the same thing last year when lithium was at 70,000 a tonne. Lithium's come off 70% since then, the price. And I was speaking on this program last week about lithium companies on the ASX. And I don't think most of the explorers and developers will end up going into production. Because I think the marginal producer, and I think some of the brines, especially over in Chile and South America, I think there's some question marks around how viable those projects are. But when you look at a company like Pilbara Minerals and Alchem, their quality. One of the Pilbara is one of the largest producers in the country. They've got further exploration activities they're working on, and their scale. And in some of the research that we put together only a month or two ago, looking at the net zero targets that we've set for 2030, if we're to meet those, every lithium project currently known to man, even if they come online in 2030, there's going to be a 55% shortfall in the amount of lithium we need to feed these batteries. So when you look at the data, if Citi are a little bit right and it tracks sideways for a while, over the long term, there is so much upside. I have to put a buy on Pilbara at these prices.
Okay, but because it's a producer,
Yes.
you wouldn't be going to the explorers and the pipe dreams down the road.
I think if they're cheap enough and you want to toss a coin, we spoke about Azure last time I was on the show. Whenever they have those spectacular runs, I think before they've got their DFS out, I think it's time to maybe take your profits, stick to the producers, Pilbara, buy.
The trading sentiment, basically. If you.
Yeah, absolutely.
By the way, are you? What's your view on all those alternative battery technologies that are currently in acceleration?
Yeah, so we actually have a new fund. It's called the Battery Transition Fund, and we are investing in all of those new technologies.
I'm the ideal sidekick here, am I not?
Oh, thanks.
Have you talked about this earlier? No.
No.
Right. So
I think that is the space to be in. I think lithium, the price, and all of the raw material providers, I think they're there, and I think the market will track those. I think the upside and the opportunity in this space is in the new technologies that are going to either improve existing battery technology or completely new battery technologies. And there are some really exciting things coming.
read Toyota's battery, released a battery that has a 1400k range or something.
Toyota have just invested $800 million into a dynamic inductive charging company. So that's where you they build charging plates into the highway and your car will charge as it's driving. So there'll be lanes on freeways with charging lanes.
Right.
So how does that benefit? Much smaller batteries required in the cars, therefore the cars aren't scrap after 7 or 8 years.
Right.
You might be able to replace the batteries. So.
Well, I sat next to a bloke at a rugby lunch a couple of months ago who just bought a chain of tyre franchises because he said EV vehicles are so much heavier than every other car. They're going to go through tyres like nobody's business.
Yeah.
So that's how he's thinking laterally about it.
What a play.
I don't know.